Did you know that nearly half of Australian retirees rely on the age pension as their main source of income, and over 25% depend on it completely? In today's video, I'll break down what the age pension is, the 3 key factors for eligibility, how much you could receive, and how it's paid. Let's get started. What is the Australian age pension? It's a key part of the country's social security system designed to support older Australians in retirement. It provides a steady, lifelong income for those who meet certain requirements. While it's not meant to fully replace your income, it's an essential part of retirement planning for many Australians. Who is eligible? It all comes down to 3 key factors: age requirements, residency requirements, and means testing. Let's break each one down. The minimum age to qualify for the age pension is 67. While this age has gradually increased over the years, no further increases are currently legislated. The second factor determining your eligibility is the residency rule. To get age pension, you generally need to have been an Australian resident for at least 10 years in total. For at least 5 of these years, there must be no break in your residence. This rule ensures the pension is reserved for those with a genuine connection to Australia. But of course, there are some exceptions. I'll leave the link to this page in the description box down below. The third factor is means testing, which includes 2 key tests: the assets test and the income test. The assets test looks at what you own. It includes things like your home contents, motor vehicles, savings, investments, superannuation accounts, investment properties, and so on. However, if you're a homeowner, your principal home is excluded from this assessment. The income test considers the income you earn, including any work income, rental income, deemed income from your financial assets, income from overseas, and so on. Centrelink applies both tests, and the one that results in a lower payment determines your entitlement. How much age pension can you actually get? Well, let's first talk about the maximum age pension rates, which vary depending on whether you are single or a member of a couple. From 20th of September 2024 to 19th of March 2025, the maximum basic rate is $1,047.10 per fortnight for singles and $789.30 per fortnight for each member of a couple. In addition to the basic rate, there is the pension supplement, which combines allowances for pharmaceuticals, utilities, GST, telephone and internet expenses. You don't need to apply separately for this. It's automatically included with your age pension payments. The maximum amount is $83.20 per fortnight for singles and $62.70 per fortnight for each member of a couple. There is also the energy supplement designed to help with the energy costs. Again, no separate application is needed. It's added automatically if you are eligible for the age pension. It's $14.10 per fortnight for singles and $10.60 per fortnight for each member of a couple. Adding these amounts together, the total maximum fortnightly payment is $1,144.40 for singles and $862.60 per fortnight for each member of a couple. This is equivalent to an annual income of $29,754.40 for singles and $22,427.60 for each member of a couple. Again, these figures are current for the period 20th of September 2024 to 19th of March 2025, and they are adjusted twice a year in March and September. On top of this, if you are eligible for the full or even a part age pension, you will automatically receive a pensioner concession card, which comes with a wide range of valuable benefits. This includes discounts on prescription medicines under the Pharmaceutical Benefit Scheme, reduced utility bills, discounts on council rates, and reduced public transport fares in most states and territories. You may also be eligible for discounted vehicle registration, cheaper driver's license renewals, and potential savings on medical expenses. Altogether, these benefits can be worth thousands of dollars each year, helping to significantly reduce your cost of living. Now let's talk about assets test thresholds. They are different depending on your relationship status, whether you're single or a part of couple, and whether you are a homeowner or non-homeowner. For singles, the assets test threshold is $314,000 for homeowners and $566,000 for non-homeowners. For couples, the asset test threshold is based on combined assets. The threshold is $470,000 for homeowners and $722,000 for non-homeowners. If your total assets are below this threshold, you will receive the full age pension. However, if your assets are above the threshold, your pension is reduced. For singles, for every $1,000 over the threshold, your pension reduces by $3 per fortnight. For couples, for every $1,000 over the threshold, each member's pension reduces by $1.50 per fortnight. Once your assets reach the upper threshold, also known as the cutoff limit, you won't be eligible for age pension. For both singles and couples, the cutoff limits are higher if they also qualify for rent assistance. Now to the income test threshold. If you are single, you can earn up to $212 per fortnight before your age pension is reduced. For every dollar you earn over that amount, your pension goes down by 50 cents per fortnight. Once you earn $2,500.80 per fortnight, your age pension stops. If you're a member of a couple, you can earn up to $372 per fortnight combined before your age pension is reduced. For every dollar you earn over that amount, each member's pension goes down by 25 cents per fortnight. Once your combined income reaches $3,822.40 per fortnight, your pension stops. For both singles and couples, the cutoff limits are higher if they also qualify for rent assistance. Now, when it comes to financial assets such as bank accounts, shares, or certain superannuation accounts, the income test doesn't look at the actual income you earn from them. Instead, it uses deeming rates to estimate how much income your assets are generating. The current deeming rates are 0.25% on your financial assets up to $62,600 for singles, or $103,800 for couples, and 2.25% on your financial assets over the threshold. These deeming rates will remain the same until 30th of June 2025. The assets and income threshold are adjusted 3 times a year, in March, July, and September. The figures in this video are current for the period 20th of September 2024 to 19th of March 2025. If you are watching outside of that time frame, make sure to check for updated figures and thresholds. I'll link a more recent video in my channel as soon as it's available. Isn't that a great reason to subscribe? Oh yeah, if you want to download these rates and thresholds on a single page or Excel spreadsheet, click the link in the description box down below. How is age pension paid? Once approved, your age pension payments are automatic. You don't really need to reapply unless your circumstances change. It's paid fortnightly directly into your bank account. As mentioned earlier, the payments adjust in March and September to account for changes in the cost of living. Now you've got the basics of the age pension covered. Watch this video if you want a step-by-step walkthrough of how to calculate your age pension entitlement. It has a comprehensive example that shows how different types of assets and income are assessed under the assets and income test. Plus, you get to download the Excel template to get a head start on your own calculations. Thanks for watching. I'll see you over there.